So how many shares of Apple stock do you need today to retire by 2030? Apple right now is the most valued company in the world at the time of this recording. But with the massive market cap that it has, is retiring off Apple still possible? Well, in this video, we're going to find out. Hey guys, I'm Curious Pejjy, and I'm a very curious person. I'm curious to know how many shares I need today to retire off Apple as soon as possible so I can enjoy my life in the 2030s. You know, chilling back in my massive pool, making the money rain with a glass of champagne, staring at my Tesla Roadster. Anywho, I got to work and the results are pretty darn interesting. So let's get down to it. All I ask in return is a like and subscribe if you haven't already. Let's go, man. The first thing we have to figure out is how much our expenses are going to be by 2030. After doing some research, it seems like in the United States at least, the average monthly expense today is $5,000, which is absolutely crazy. That's like 60 grand a year, and that's just the average. I mean, that's just crazy. However, though, I did some more digging and it seems like $5,000 a month as an expense is for a family of two, which makes more sense. But in this video, let's be selfish and say that you have your own goal and you plan on to retire off individually on Apple stock alone. So that average expense of $5,000 a month gets dropped down to $3,200 a month, which is about 40 grand a year. It's not bad. Now, obviously, by 2030, $3,200 a month, the buying power is gonna be a whole lot less by then, thanks to inflation. To be conservative, I gave this $3,200 a month an average inflation rate of 3% every single year up until 2030. Remember, guys, usually inflation is around 2%. 3% is being really conservative. And we get $4,020. Let's just say $4,000 for simplicity. Let's also say that you don't wanna live on a minimum lifestyle. You wanna have fun with the money, you wanna travel, you want to have fun. So we're going to slap on another $1,000 to that, making it $5,000 a month by 2030. Now, some of you guys mentioned a very good point in my previous retirement videos. You guys mentioned that the buying power of $5,000 a month after 2030 will keep getting less and less because of inflation. Remember, we only calculate inflation up until 2030. And although we are going to include inflation into our earnings as well, in our compounded earnings, it's worth noting that the monthly withdrawal of $5,000, the buying power will get less depending how long the retirement is. 20 years, 30 years, 40 years. So instead, I increased the monthly expense to $5,500 a month as a monthly expense, assuming that half your retirement you'll use $5,000 withdrawal on a monthly basis, and the later half will be using $6,000, which gives it an average of $5,500 a month, which is about $66,000 annually by like over 2030. Now, let's say by 2030 you decide to sell your entire Apple stock position and decide to put it somewhere safe like the S&P 500, which guarantees an 8 to 10% return yearly, annually, on the average. But to be conservative, let's say 7%. Now that number then needs to sell out of Apple stock to be put in the S&P 500 index fund needs to be $900,000 in order to live off of it for nearly 40 years. So sheesh, 40 years, that's pretty nice. Two different calculators confirm this as well, about 37 to 38 years, so that's pretty nice. It's a good reliable time frame to look at for $900,000 with an average rate of return of 7%. Adjusted for inflation, by the way. The 7% is adjusted to inflation. So that's pretty nice. That's actually really good. So now that we have our monthly expense budget and how much we need to live off of it, let's go and find out how many shares you need today, right now, to retire by 2030. But before we do, have you smashed that like button yet, man? Come on, man. Smash that like button, man. Let's go. Alrighty, so here's my little chart here that predicts how many shares you need today to retire off by 2030. And obviously, after the 2030, you put that money in an S&P 500 index fund, and then you let that do its magic. Now, please note that not every year the S&P 500 is going to give you 7% return. On the average, that the history that we have the S&P 500, the average return is 7%. So maybe 1 year, you may lose 10%. Or 20%. The year after, it may go up 30%, and then the next year may go down 40%. It works better long term, and it's always good to stay in the market and only reap how much you need to live on a monthly basis. But on the average, the S&P 500 gives about 8 to 10%, but we're just saying 7% in this video to be conservative. Now, this chart, as you guys see here, I have a bear case, base case, and a bull case. If you guys have been watching me for some time and some of these numbers look familiar to you, well, that's because it's from the Apple updated video. If you guys haven't watched it, check it out. It's pretty darn interesting. There's a base case, case and a bull case, which I pretty much took that and I put here with slight adjustments. But the chart is extremely straightforward right now. The current stock price is around 140 bucks at the recording of this video. Total revenue, net income, shares outstanding, EPS, PE, which I put it at 30. I think that's fair. If we look at the PE chart, it seems like it's going to be hovering around 30 for some time. And we got the average growth year over year for 2030, 5.5%, 10% for the base case, and then bull case 16%. Because come on, man, Apple right now they're around almost 2.5 trillion. For them to double, that's 5 trillion. I mean, how are they going to double in a year or two? It's just not possible. And don't forget, they're also a matured company. They're becoming more of a matured company. So keeping these low percentages are a bit more realistic. So let's go ahead with the stock price and the market caps are going to be for all three scenarios. For a total revenue in the bear case is about $600 billion, which by the way, right now, they're almost at 300 billion. So if you guys think from now till 2030, they're only going to double, yeah, I don't think. Anyways, I'm going to tell you guys what I think at the end of the video, what I think is most likely going to happen. But in the bear case, 600 billion in revenue and the net income over $150 billion. With a PE of 30, we get a stock price of 405 and a market cap over $4.5 trillion. So literally not even double of what the stock price is now. But that's the bear case. The base case though, with an average growth year over year of 10%, we get a total revenue of almost $1.2 trillion. In revenue, I mean, that's crazy. Do you guys think by 2030 Apple is going to be in the trillions of dollars in terms of revenue? Comment down below. I want to know what you guys think. Almost $250 billion net income. With a PE of 30, we get a stock price of $652 with a market cap over $7.3 trillion. Now, this makes more sense to me. But the bull case is quite interesting because we're going up by 16%. And the reason why I chose 16% is because recently, the growth that they had recently averaged to around 16%, which is pretty beast from Apple given how big they are. 16% weighing about like $2 trillion valuation, almost 3 actually, it is a big deal. Apple is going in strong. Total revenue in the bull case over $1.7 trillion. That's pretty crazy. And the net income being almost $400 billion. With a PE of 30, we get a stock price of $956 per share and a market cap almost 11 trillion. I mean, sheesh, that's just crazy. $11 trillion by 2030. I mean, we gotta wait and see, but that's crazy. Now, this is how many shares you need today in order to make that $900,000 by 2030. In the bear case, shares value today, we need 2,223 shares. I mean, that's quite a lot of shares, man. Like, Jesus Christ. That comes to a value of over $311,000. I mean, that's just crazy, but you know what? It's not all bad news because Apple pays a dividend. At the moment of the recording of this video, it pays about 0.7% in dividend, which if you decide to go all into Apple, put 311K into Apple now, from now till 2030, you would make almost $20,000 in dividend. But if you have a drip plan, if you guys don't know what a drip is, it's a dividend reinvestment plan. Pretty much what it does is that any dividends you earn, it just automatically gets invested and you just get more shares. If you do that, that's almost $20,000 and the shares after drip is around 2,083 shares. So you would need 2,083 shares today, which is valued of over $291,000, which is still a lot of money. I don't think any of us have that laying around to plow into Apple stock. I think we'd be better off to put that in real estate, to be honest. But if you guys are crazy enough to put that much money into Tesla and go all in, this is how many shares you would need to retire by 2030. But luckily, this is only the bear case. Let's look at the base case. In the base case, all you need is 1,381 shares, which is still quite a lot of money, it is like almost $200,000 of value today. Sheesh, it's a lot of flipping money. But if you guys decide to plow all that in right now and hold now till 2030, the dividends will be over $12,000, and dripping that, shares will be 1,294, which all you would have to put instead of that is $181,000 opposed to $103,000. I mean, still, it's not pocket change. It's absolutely not pocket change, but that's what you gotta do. Luckily, that's only the base case. The bull case, they're gonna grow on an average rate of 16% yearly. We hope at least. And with that, all the shares you need in the bull case is 942 shares, shares valued of $132,000. Dividends will be paid out over $8,000 if you go all in right now. With shares after drip, all you would need is 882 shares, which will be valued over $123,000. Now, personally, what I believe what Apple can do by 2030, it's definitely not the bear case. And I don't think it's going to be the bull case either. I'm heavily thinking and believing that by 2030, the base case could become a reality. Around 7 trillion, in between 8, ranging between 6 to 8 trillion. That's where I think Apple is going to be by 2030. And I only say that because they only have selected items that are coming out and not as exciting as they were like 8 years ago, 9 years ago. So unless Apple unveils another product that's revolutionary or just another like a world-changing product or a massive change that could bring a lot of revenue and profits, until then, they're just going to continue growing what they have now and expanding their sales. That's all I can see for now. Yes, there's the CarPlay, the new Apple Car coming, which we haven't seen anything of it yet, and many other things that are coming, but they're existing products. We need to see something that's like, wow. Kind of like what Tesla is doing. So I believe the base case is more realistic. 1,200 shares, 1,300 shares is what you need today to retire off Apple by 2030. It's quite a lot. It's quite a lot of shares. I'm not gonna lie. That's why I don't have any investment in Apple. All my investments, I'm all in into Tesla. And if you guys want to see how many shares you need today right now to invest into Tesla, because the share price is down and it may go down in the future, but what a time to load up on some shares and hold till 2030 so you can retire. Check out this video here. The numbers are a lot, but I think they could do it. I think there's a lot of pessimistic over that they won't, but I don't want, no, you shouldn't underestimate Tesla or even Elon Musk, because they get it done. Check the video out. You won't be disappointed. Don't forget to subscribe, guys, and I shall see you guys in the next video. See ya.